The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for the one and only Larry Pesavento. My pleasure to be here. And I'm normally doing my show, the Tiger Technicians Hour, which is at noon to 1 p.m. each day, Eastern Time, that is. And my newsletter is called The Opening Call. Let me show you some of the techniques I like to use here in the Chapman Wave methodology. Let me just get this right here. If I can find it, there it is. In the Chapman Wave methodology, we try to identify the lowest low bar and then merely count each successively higher peak, alphabetizing them A through G, 7 higher peaks, but it's at that fourth highest peak, peak A, B, C, peak D, is where other things can happen. That's where you can get a far more serious decline, or you could recycle and keep going higher. That's the first thing. So let's see how that works right here. And you can see we made a peak D in the 10-minute E-mini chart right there, and that was at about 9 o'clock last night. And the price was, let's see, so this is the ESU contract, E-mini, S&P, 3156.25, pulls back sharply. Then it makes another series of highs. If it just misses that D, we can call it a C1, C2, which acts like a D and it pulls back. Then there was another rally that went to a peak D and pulls back. Then there was another rally that went to a D and then just snuck a little higher to an E, pulls back, and then makes the arch formation. So I have an expression that says a rectangle pattern can last a lot longer than your patience. So look at the rectangle pattern until we break into the 31, let's call it 3160s. That really is an upside breakout. And the downside, we've got the 200-period moving average support at 3107. We're kind of stuck in this range. Now, a couple of things. I also use MACD, the moving average convergence divergence, and the slow stochastic. You can see right here. And that little blue line is the on-balance volume. That goes way back to the Joe Granville days. I still love it. It is just a move. It's just a single line. Adding if the bar has a higher close, you add it to a running total, and if it has a lower close, you subtract it. Just real simple. For me, it does a great job. So now what I want to also show you is there's a pattern. Well, first of all, I have an indicator that flashed yesterday on the TRIN, Richard Arm's TRIN index, short-term trading index. I've never quite understood quite how he uses it, because I use it in a completely different way. I only use numbers, and if it's very low, it means that the Dow the next day, no matter how high it is in the futures pre-market or overnight, it goes low. It goes negative in the morning. So that's where we are right now, and the futures are up 72, so I'm not sure how it's going to do that, but we'll see. And it doesn't have to go anything other than -1 or more, and that makes it a successful, and it's usually in the morning, and it's usually very early, right at the opening. But we'll see what happens. And the other thing is, there's a pattern that I look at here, another pattern. So let me get to this pattern, and I'll show you what it is. And this particular pattern, if I could just get to it right here, this particular pattern, I call it the falling axe. Why? It looks like an axe. Look, here's the handle. It's really two trend lines, an expanding cone, declining, and it looks like the blade of an axe. So what happens is that it gets to a certain point on the way down, lower highs and much lower lows, and then it starts to turn and makes a U-shaped pattern. I'm all about these U-shaped patterns. I'll talk about that in a moment. And then if it breaks out and it takes out that high, you can have a Chapman Wave parallel one-to-one expansion to the upside. Why am I talking about that? Look at this. We have that Y pattern right here. In fact, you see this maroonish, light maroon line? That was the one-to-one expansion from this particular pattern here called the Chapman Wave stalk leg formation. There's the leg, there's the body, there's the neck, and when the beak concludes, there's usually a very strong rally. Did we not just see that? There's the beak. goes down to 29.2375 from the 32.20.50 high with a Chapman Wave 2-bar reversal. And now we've got a series of lower highs and much lower lows. And that says that if there's a decisive break above this trend line, if we start to see the E-mini at any point in the next, speed is also the issue, so you want to see it in the next couple of days, go to 31.68. That's a breakout. And then you look for the next higher trend line or gap or price, and that would be 32.250. 32.20.50. So we go one step at a time. We've got this resistance. Yep, this resistance we need to see broken. We've got a weekly Chapman Wave stalk leg formation. There's the leg, there's the body, here's the neck, and that is pulled back. If it goes above 32.20.50, what do we have? We have, if it's this week, by Friday, we extend leg C. If it's next week, we go to that leg D. How important is that fourth highest peak? Look, there's a peak D. Look at that sharp decline in the daily. Here's the weekly. The one in the middle is the weekly. 33.96.50 on February, the week of February the 21st. Look at that peak D decline from 33.96 to 21.65. I'd say that worked. And here's the 120-minute chart. There's this rectangle formation. There are those peak Cs. You just need to go above 31.47 to start a leg by 25 cents. That'll start leg D. And if it continues high and goes above 31.56.25, that's really bullish. So where are we right now? I still love the market. We've been long for subscribers to my opening call from in options calls from the morning of the 23rd of March. And then we added to that position with the diamonds. The diamond, we still have that. Some people still have that position in the calls, which are up about 500, 600%. Now what we're looking at is the at 210, we went long the diamonds. So that's the Dow. Now let me do a couple of other things here. I wanted to show you this. This is on the close yesterday. The Dow diamonds had this doji, long-legged doji candle. Make it real simple. If there is a close above yesterday's high in the Dow, which was 26,611, actually, I'm not even going to say close. If there's a push above it, I'm going to say that's really positive, and we'll probably be filling in this island reversal gap from a peak D. How many times are we looking at these Ds? Look at that D in the weekly chart from 29.568, the week of the 14th of February, smashed 39% down to 18,213. I don't need this anymore. The 120-minute chart, show you the monthly chart. Monthly chart at a peak D at 29.568 from February. I mean, that is a big move down. So with that said, I want to do a whole bunch of things. I want to show you that the S&P, the actual cash S&P, made a peak E with an island reversal, hasn't filled in the gap, got really close, about 10 points, but it held the 200-period exponential moving average. It's funny that I'm mentioning all these moving averages and these other technical tools. Larry never uses those. So let's just be clear. Everybody has their little, their toolbox. I have a really big Sears and Roebuck toolbox with all my tools. Larry does just godly, butterfly, Fibonacci. He tries to keep it as simple as possible. It was great for him. Everybody has their own techniques, and I love that part of it. That's the whole beauty of technical analysis. So S&P acting well. The QQQ, I'm going to go to the NQ right now. I'll go to the continuous contract. Made a peak F top, and look at that V-shaped pattern. Still very good, and actually the futures are up 46 in the NDX 100 E-mini continuous contract at 10,009. I'll be right back. Basil Chapman sitting in for Larry Pesavento. We've got a lot to look at. I want to look at corn, soybeans.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Nothing like coming back with a Mozart overture right there. So we're looking at the TLT. The TLT, you can see there was a gap low, then island reversal up, and then an island reversal down. It's trading right now at 160.13, up 23 cents. So I had on my show recently, last week, I was someone called to ask about the bonds and the TLT in particular. And what I've said is that I believe that this pattern in the weekly chart, here's the weekly on the right, is the monthly. And look at that, that's a peak D in the monthly. This is the third month now we've not been able to get above 179.70. And what I said was that I believe that there's an arch formation that's going to make a second arch, and the lowercase h can go to a lowercase m. What do I mean by that? In my technique, there are only three patterns. One is a straight line up or straight line down. The other is the cup, and the other is the arch. You can mix them up, straight line down, and then an arch. If it takes out the left side low, the reason why I made it red, you can keep going down. We're going to maybe see that early this morning when the market opens, if the Dow does go negative. And on the way up, green, because the cup formation, if it takes out that left side high, it can go higher. So within that, of course, you can get many other things, but the core is that there's a straight line, a cup, and an arch, and the cup could be a V or an inverted V, but it's the same principle. You're going from one place, 1 point lower, back to that point, or 1 point higher and back to that point. Okay, with that said, what are we looking at? We're looking at the dreaded H right here. We're looking at the failure pattern right there. And we've got another arch formation in the daily. And I say that I believe that we will go from the lowercase h to a lowercase m. In other words, a second arch. So that's where I think we are in the bonds. When and if the market starts to pull back sharply, money invariably goes from the risky assets of equities into the more safer bonds. And that's kind of what we see. And so if there is a very sharp pullback, Dow starts to decline by 1,000 to 1,200 points and holds it on the close. It doesn't do that these days, but if it does, you will start to see money go into bonds, and that means that the U.S., the T bonds and the TLT will rally while the yields come down. All right, so then with that said, I wanted to show you crude oil right now. We're talking patterns. We're talking about a left side, right side price time match. It broke out at peak D, recycled high, it went to ABC, but that is also a G/C. I don't have to get into that. Just to say, the cup formation suggests that if there is a break to the upside above the continuous contract 40.44 high that was made on the 8th of June, and the technicals, if they are weak, there's a good chance that it won't go much higher, and then it'll start to pull back and go back into the cup formation. But a very strong leg, A to the upside in the weekly chart. But it is so far from the 200-period moving average of 63, 67, and even the 50-period moving average of about 48, that crude oil is just acting okay right now, but it's not doing well. So let's just do this. W is for the continuous contract of wheat, das wheat. And what we're looking at is that arch formation. Look, there's another H formation that failed. The arch formation here has taken out the left side low. And my theory with this is that if you take out that left side low, in this case, continuous contract low of 18th of May of 493 and 6/8, if you take that out, you have 2 days, maybe 3, to get back and close above that. Well, yesterday took it out on the downside and it closed above it. Today we're trading 491 and 3/4. It is now under the 493 and 3/4 low. This is wheat is having a very, very difficult time. Let's look at soybeans. Soybeans continuous contract S. It's made a peak C1, C2. The nice cup formation. Look, there was the arch. The arch, if it holds successfully, can then become a cup or a U formation. So there's the arch. It held, and now what it's done is it become a very big cup formation, right? And what we would look at is if it takes out the high that was made right here on the 5th of June of 873.5. The next high will be the high of the 13th of April, 877.5 would be the next target. So MACD is good. Stochastics at 87, that's very good. So this should hold, and it's above the 9-period exponential moving average and the 14-period moving average. So it says, yep, a little rectangle formation, maybe even a little mini cup. Let me put this in right here, a little mini cup. And we'll see, could hold here just a little longer, but it looks like it really wants to go to a higher high. That would be leg C in the weekly chart. But monthly chart says, wow, that is still a horrible looking chart. There's a lot of work to be done. Corn, as we say here in the Boston area, corn made a peak C1, C2. MACD is flat. Stochastics weakening, very weak at 65%. On balance, orange weak. This is a little different. This at 326 and 3/4. Corn could go a little lower. If it takes out the low of 3 days ago, 325.5, there's a good chance it's going to test 324.25, the low of the 10th of June. This one looks stuck in a range for now. It isn't breaking out of this rectangle. It's building a base from which at some point, I wouldn't be surprised if at some point in the next 3 weeks, you're looking at corn suddenly in the 338 to 342 area. Why? Because this is building a rectangle formation, a big base of support with many restarts. Once it really takes out the resistance level, I'm going to make it a little higher from now, just there. Once it takes that out, that should form a base, and you can see the weekly chart, MACD is improving, stochastics improving a little bit. It needs unbalanced volume to really get moving. Monthly chart is just horrible. So I've done that. Now, a couple of questions I had. I wanted to do this for a subscriber who called, who wanted to know about FSLY, which is Fastly. That's a stock. It's trading at 54.10. FSLY is a symbol, up 54 cents pre-market. Closed yesterday at 53.56. I like this very much. A leg E, this could have recycled even in the daily chart. The MACD is just about across positive. Stochastics at 81%. On balance volume is very strong. So I think that the 54.60 to 55.30 area probably is going to be a toppy area. But it looks very good, and it's a leg D in the weekly, but only a leg A in the monthly. This is an IPO about a year ago. What was that? That was in May of last year, just over a year ago. And it had a low in the 10s, and now it's trading up in the 50s. Excellent action. The way it looks is that at some point it's going to come back, and this area that I'm putting in here as a rectangle, I'm going to suggest that that's going to be the consolidation area when it starts to consolidate. So we've got that out the way. Next question I had, did I get any questions? Yes. A question about gold. Yep, gold right now. Gold is down 7 at 1729. Remember, we were talking about that falling axe? Look, here's a declining line. Here's a declining line. So lower highs and much lower lows. And it just says very simply, I'll do this live here. Let me show you. I'm going to make this green. I'll make this green. And just before we go to the break, and the futures now are, the hours are 42 in the futures. So I'm going to make this red. And then I'll talk about the Chapman Wave inside track repellent zone. That's right there. So gold needs to break above decisively into the 1746, 1752 area. Otherwise, it's just stuck in a range right now. I'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I didn't even see that I had messages here that say that my charts for my traders, for my service, the opening call, didn't post. Give me 1 second here. I'll post. I don't know why. What is happening here? Let me just see if this is working. So I'm Basil Chapman sitting in for Larry Pesavento. My Chapman Wave methodology had the trend gauge very low yesterday, which said that regardless how high the S&P and the Dow futures were, there should be a minus opening for the Dow. Let me just see if I can post this. The opening call for Wednesday. Wow, I needed to get this out, and I don't know why I didn't post, and I didn't see that, of course, because I'm doing the show here. Wednesday, what's today? 06-17-20, and I had all the time in the world to get it out, so I have no idea why I didn't actually post. Let me see if I can do this now, if you don't mind. I just need to get this out. Trader's Corner. Please go. Yes, thank you. Oh, there was a problem, I guess. All right, give me another. I just need to post this. I got my Trader's Corner, got my Dow chart. I'll even talk about this in a moment. I've got my upload image number 3. Here we go. That's the E-mini. Well, that'll, of course, be very late. Oh, I had this ready at 5:30 this morning. All right, and now one more chart, and we've got the new trade for the day. We've got time on that. And I'm posting this. I apologize to all those people that emailed me to say, where are the charts? Where are the charts? Maybe it did go out. I don't know. I'm busy doing the show. Okay. So here I'm talking about the lowercase h. Remember the pattern that I talk about? It comes down straight line, and then it makes an arch, and it retests the left side low. So the Dow futures, the E-mini futures are at 450. The Dow, did it go negative? Just even it has to do that just for a second, because that's the that is the technique that I use. So let me just go here. And we'll talk about that in a second. INDU. Did the Dow go negative today? It closed yesterday at, closes at 26,289, and today's low is 26,326. I thought I saw it negative there for a moment. Maybe not. Well, it's up 53. Oh, anyway, that technique won't work here. If it do, we'll see. Okay, so folks, for any of my subscribers, yep, it should be out in another minute or two. There was nothing that was so urgent that it had to be at this very moment. But there is a trade that is active until 12 o'clock today. It's a screamer. If it works, I don't know if it'll work. We'll see. All right, so we're looking at the Dow right now, up 72. Here's the pattern we're looking at. It needs to break above yesterday's high of 26,611, I believe. 26,611, yes, to start an extension to this gray leg A, and it needs to be able to fill the gap. I think there's going to be a little problem trying to fill the gap right now. I think kind of sideways for much of the week. We'll see. And we're looking also at the S&P. This is the S&P cash for now. The S&P cash is trading at up 11 at 31.36. And 32.33 was the high of the 6th. Did I put the date in? Of the 8th, 6/8. So let me just put that in right here. So we're talking about 6/8. All right. And the low that was made, look, right on that 200-period moving average. You see, the reason why I put these in years and decades ago is because you don't need them when you don't need them. But look how important this 200-period moving average was. It took it went right there. And this 200-period moving average was resistance all the way from the high that was made on the 29th in the S&P at 29.54, 29th of April. It pulled back to 27.66. That's how powerful that peak F was. And then it started a brand new peak A, B, C, D, and then went to an E. And it took out, look, it hung around that 200-period moving average. That's how important it is. Once it was up here, I didn't have to care. I couldn't even care less about a 200-period moving average. I looked for other techniques. And the other thing that's really important for me right now, and one of the reasons why we are still very much in long positions, is because within the context of what we're looking at, this 9-period green, 9-period moving average, is still way above the 14-period moving average. To see them cross negative, you would probably have to see the S&P close below about 30, and right now it's 100 points above that, 31.33. So it's very important to me using these techniques, plus all the notation, plus on-balance volume, etc. And there are different techniques within that, and that is really important. Let me show you something that I think is going to be important today. The QQQ is trading up $1.62. It's up 0.67%. The Dow is up 0.32%. S&P is up 0.37%. So that means the tech sector has yet again shown the strength. And I put this question mark here because that peak F should have had a down arrow. But the price held very well. The 9 was way above the 14-period moving average. The MACD did dip and the stochastic did dip, but the on-balance volume is strong. And that says there's a greater chance now that you've got some kind of a V-shaped recovery. Does it go to a new all-time high above 247.82? We just don't know that. But look at the weekly chart. And this weekly chart went right to where? It went to a 200-period moving average exactly at 164.93 the week of the 27th of March. And look how it's screaming to the upside. And it's only in a leg B. And that says it should still go to a C and a D. So this is very bullish looking at. Yes, you can get a sharp pullback. You can even get a pullback from the 244 level to the 14-period moving average of 224, even lower. But it's still way above the beginning, the buy signal to buy mode. And that's really important. A couple of questions here. I was asked, would I look at, and thank you very much, S&P, for, I saw yours there, but the other ones were emails and stuff. But thank you for letting me know that my newsletter didn't post today. Wow, that would have been terrible. So work, WORK, Slack Technology, trading at 33.19, up 84 cents, made a peak E and a gap down reversal to the downside. And that gap it started off just at 40.07 on the 4th of June. And 4 days ago, it went down to 29.54. I would say that's a bit of a pullback, a gap down. Now, I have a thing about these gaps. If a gap gets filled, I like it methodically. I don't like it to go straight back up. I like it to be very steady. Once that gap gets filled, that is really positive. It usually doesn't go back into the gap. So this has got a long way. It hasn't even gotten to the gap high of 33.60 that was on the 5th of June, when the day before it made its all-time high and the gap down, and that low was 37.67. There's a huge gap between 37.67 and 33, 4 points. So I would just say that work, Slack is the company, Slack Technology, Inc. This is very nice action over the last 3 days. But I'd treat it as a trade, and then I would be looking at it and say, can this fill the gap? Because it is a peak D in the weekly, but it's only a leg A in the monthly. Put this on your list as a potential for 2020. But I would say on short-term trades, maybe yes. I would prefer to say just be a little careful. Raise your stop if you're in it and you're long. I would not be shorting this just at this moment. Let's see how it goes over the next few days. But it's acting the Dow just went negative for a moment. Isn't that amazing? This technique I developed years ago. I'm always amazed. When it's either too high, it says something. When it's too low, it says something else. I'll be right back.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit direction visioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hi, folks. So the irony of the whole thing is that I got a low trend reading yesterday, which said that regardless how high the Dow futures and the E-mini futures are, there should be negative action early in the morning. And it looked like it was impossible, but we got it. We're down just a moment ago. Now we're down 1. So that particular indicator also just flashed a very high reading. And that says that within the coming 2 sessions, there should be a 9 to 11 point rally in the E-mini. So that says, hey, just be a little careful here. Don't get too short too quickly because there could be a really good bounce. All right. With that said, so that was work we just did. Another question I had was, could I look at DOCU? DOCU is a stock we once owned and we don't have it, but it's fantastic. It's at 164.42 up 139. It's at up $1.39. DocuSign Inc. Electronic signing. I mean, come on, this is the state of the 21st century, right? Electronic everything. So it's in just a spectacular move. It's I wouldn't call it parabolic. It's getting parabolic, but it's a leader. And stocks that make new highs tend to continue making new highs. Well, this is what this one's done. Docu looks great. I've got it in an. Sometimes I have to have an alternate count. The only reason being that the technicals are very strong, but the alphabet of my alphabet soup has gotten to an F. And that says you've got to be careful. But the technicals say, no, it's probably an alternate count B. And that last peak D was probably the low, was the high. And this is a brand new buy mode. But in the meantime, the MACD is so strong. Stochastics at 93%. In the 93 to 96 or 7% is just fantastic. The textbooks say, and over 80% is overbought. I say nonsense. That's what you want. You want to buy stocks that are holding beautifully with a stochastic, the slow stochastic, above 80%, but preferably above 90% and flat. Look what happens when it's flat. That's fantastic. Look how it keeps going high. Look what happens when it just goes up and then it goes back under 80%. That's when you get your pullbacks. So this is outstanding. Look at the the weekly chart's 93%. Monthly chart is an IPO. It's just a year old. A year old. It's going from $40 to $165. So yes, it's getting a little overbought, but this is really outstanding action. And that says that within the context of stocks that are doing really well, don't fight the trend. Don't try to short the best ones. Short the weakest ones. Yes, if your timing is great, you can do very well shorting the best, but you're not going to get the kind of move that you would if you short the weakest ones. Okay. Another question I have is, Basil, you always look at CTAS, Syntas, as an economic indicator. What do you? Yes, I'm taking. Hey, Victor in Paramus, New Jersey. Sorry, I just saw you. Hi, Victor. How are you? If he's still there. Hello, Victor. I'm sorry, Victor, if you waited too long. I just wasn't looking to the left. I didn't expect any calls. So you want to look at Oracle? I'll do this. Victor, if you're there, just give a yell and say, I'm here. So Oracle, I haven't redone this. This is peak A, peak B, peak C, peak D, peak E. Then it takes a breather and it goes to peak A, B, C. And that still holds. Yeah, so Oracle trading down $1.49, 53.10 is saying to me that it's in this rectangle sideways move. Let me just draw this right here, just make it as easy as possible right there. And it's stuck in the range. If it can break and close above 55.55, it needs to close. It can't just hit it. This one has to close above that. That would say to me that not only is leg A, B, that says that the weekly chart is holding very nicely at 88% and the MACD is good and it's going to help a lot. Yeah, if I have a break and I have a chance to notate it, I'll notate it. But I just wanted to say it's acting very well, but it's in a high level consolidation. That means it could retest 52 to 51 at any point. But so far, this is very good action, even though it's down today. If you are long, I'd say hold long. But I would say to you that if you're long, you've been holding for quite a while. If it takes out if it closes under 50.50, I think it's going to continue having a consolidation phase with slightly lower highs and slightly lower lows. And that says maybe you want to take a little bit off. But at this point, look at it. Just at this point, it's good. Okay, you really need to see action on the upside and a breakout above this rectangle formation, and that says the 55.55 close is what you're looking at. A question I had the other day was GDX, and I said, yeah, you could start a little nibble at this point, but it was a little late because the best entry was missed at the bottom, and then I said also have a fairly tight stop because it's in a sell mode on my technicals. It made a peak G high, and it's trading at up 24 cents at 32.88. I don't see anything bad about it. In fact, I think as it stands right now, it's consolidating after a massive move. It almost doubled. It went from the 16s to the 37s. I mean, that is amazing. So this is a breather that it needs for gold as the market vectors, gold miners. So if you are long gold, I'm just going to say I think that's a good position to have in this environment because gold is a fear factor. People go to gold when they get very nervous. If you look at the XLF, it's tried its best to rally. That's the financials. So if the financials start to see even more deterioration, although they're holding okay right now as the XLF is, money tends to go to, my experience is money tends to go to the gold. And when you've got international tensions through the coronavirus, and that's starting to the economic comeback is being delayed for whatever reason. Maybe this is why you're going to see gold hold. But I'd also say to you that in terms of the GDX, if it takes out, there's a declining channel right here. And if it takes out at any stage, I'd even say that if it takes out the low that was made on the 5th of 31.20, if the GDX trades under 31, there's a good chance that the 29's 200-period moving average will be tested. But I think gold is still in play, looking out. But I think this is a very well-earned, a well-deserved rest. Another question I had is the dollar. The dollar is trading right now up 11 at 11 ticks at 97.12. It's just kind of stuck. We've been long the dollar for my subscribers since April of 2018 at 90.07 via the UUP. It screamed up to 103, 102.99. Then it's pulled back to the 200-period moving average. The speed was come back to the 200-period moving average says, you got to be a little careful here. So I'm looking out. I like the dollar very much, but I think this is a well-deserved consolidation after a peak E top at 102.99, the monthly chart. I don't want to see it start to break 95 support. So it's not doing anything much. EUR USD had a really nice move to the upside, made a peak E, and now it's in just a daily sell mode, not the weekly, but the daily sell mode. And it needs to hold 1.120. It's at 1.123. And the USD JPY, which is the yen, had a screamer. It went from here, talk about screamers. We just got a screamer. We got our screamer that I put in as no, did we? I think we might have missed it. Maybe we missed it by a penny. I don't know, but it's acting quite well. A, B, and you've got a C. C minus because it's pulled back very sharply. So the yen is just stuck in a range. It's at 107.33. It's kind of stuck between 108, I think now 107.50 and 106.50. I'll be right back. Basil Chapman sitting in for Larry Pesavento. My pleasure to be here. And I'll be back for the very final call. Here we go.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah, so sorry, Victor called again, and I missed it. So, Victor, I'm just saying that Oracle is stuck in a range. I've done the chart. If you look at the chart in the replay, you see it's in this rectangular formation. It's just stuck in the range. And as I said, 55 above that would be important. And a couple of things I want to mention. So the technique I've developed on this Chapman Wave trend gauge, using Richard Arm's numbers, that's all I do, is that there should be weakness, and then there should be some kind of a rally. So we've kind of got that in the Dow. The Dow did go negative. Now it's up 57. S&P's up 688. And remember what we were looking at before in the E-mini? There's the arch formation. Took out the left side low, and you got two bars in which to go above it. So we're going to be seeing, and I suspect that we're going to be seeing a bit of a choppy session for the rest of the day. Spectacular move so far. When you're looking at, look at this. Here's the Dow INDU. The Dow's really unbelievable. It went from 22,789 to 27,580, 27,580. in the space of a couple of weeks, is pull back, hit the 50-period moving average, is right back in, holding very nicely. Now, to see that an arch formation says that if the Dow, and it's the same with the S&P, drops quite sharply, takes out yesterday's low, that says be careful, we're in for a choppy 3 to 5 sessions. But if there's a move above yesterday's high in both of these indices, today, I don't think it's going to be, but I'm just saying if there is, that's very positive because it could start to fill the gap. Weekly charts are really very strong, and the monthly charts. So my service is the Tiger. My service is the I do the Tiger Technicians Hour, noon to 1 p.m. each day, and I have my daily newsletter, which is called The Opening Call. You see that on the front page of TFNN. And as I say, we have only long positions. Haven't really wanted to have any short positions right now, not on stocks. It's just too dangerous right now. But I think we're in for a little bit of choppiness, and we'll see how that unfolds over the rest of the week. So tomorrow I won't be doing my show at noon. I don't believe I'm doing my show at noon. Probably going to do it at 8 o'clock, 8 to 8:30, and then 8:30, of course, Tommy Jr. does a fabulous kind of an overview of what's going on in the market, really good. And I'll maybe do that Thursday, maybe Friday. I just am not sure yet. I got my son and grandson visiting, and I'm trying to make as much hay as possible. So have a wonderful day. Thank you very much for allowing me to sit in for you, Larry, and I hope everything works out for you. And stay tuned. You've got Tom and Tommy coming up.